go counter trend and you'll usually be right. And in terms of Bitcoin, what we're seeing here is a beautiful pop today. My feeling on it is that you've now got more sanctions with SWIFT being introduced or taken away from some of the Russian banks. This is becoming a longer drawn out conflict, more sanctions on Russian oligarchs. And that's going to make people more intrigued about, okay, well, does Russian oligarchs, do they start buying Bitcoin? Do they diversify out of rubles and out of currencies where they can actually move those Bitcoin assets to different locations and access them still? And then you also have the plight of the Ukrainians, where it's hard to get out of the country with suitcases full of money, but it's a lot easier to go somewhere else, access your Bitcoin as well. So I think you're seeing a little bit of that vibe of, okay, Bitcoin makes a lot of sense when there's geopolitical risk out there. There's a chance for the equity markets to say, okay, the Federal Reserve may not raise 50 basis points in March because of the geopolitical turmoil. Maybe they're only going to raise 4 or 5 times in 2022 versus I think what JP Morgan said a couple of weeks ago, which was 8 or 9 times in 2022. So you've seen this little bit of a situation where tech stocks have actually been doing a little bit better since the invasion. And I think it has a lot to do with the chance that the Fed is not as aggressive on tightening. Small test coming up at 42,000 may take a couple of days to try to push through it, but I do think that there is a decent chance that it's able to, and then may trade back up to that 47, this upsloping orange trend line here. I think what investors don't have to understand is that everything we do here in technical analysis land is based on probabilities, right? So when you see a sharp move down like this, there's inevitably a period where you go sideways and chop for long periods of time. So you can see how you're starting to kind of do this pattern. And ultimately, what you're forming is a bigger bearish pattern on the daily chart. It's called a bear flag or an in spirit of bear flag. And so the odds favor that at some point it breaks down. Now, it gives you a lot of opportunity to trade the range, which is what I've been doing. But inevitably, the midterm, I still think sub 20 or 20,000 is likely. And then once we get down there, once you see this kind of final flush out .com-ish type reckoning period, then I'll be starting to hodl myself and starting to accumulate more Bitcoin for the longer term. Yeah, downside is still 20 or sub 20,000. Nothing's changed in terms of that midterm price outlook. You still have a Federal Reserve that maybe is getting a little less hawkish in terms of how fast they're going to tighten. But I think that's going to keep inflation higher for longer, which means once, if we do get a settling down of the Russia-Ukraine situation, then the Fed is going to go back right towards tightening. That's going to be a risk-off situation, and Bitcoin and cryptos need to see that full flush out. So again, still ultimately looking for sub 20,000 for me to start to really accumulate for that longer term.
Okay.